Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, before 4 o'clock in New York on Wednesday, November 18th, 2015, and this is the daily report for gold and silver. We do have nominal changes in the precious metals markets, with gold trading up to unchanged on the day, currently up about 50 cents at 10.70 and change. We've seen it trade to a low of 10.64, so we do actually have a new low on the day and a high of 10.75, but we do see a contraction in range, and as I said, currently now up about 3/4 of a cent on the day. When we look at silver also trading in essence unchanged to down or up. As you can see, these prints are going from positive to negative as we speak. 14.17 with a low of 14.05 and a high of 14.25. So first we'll take a look at gold. Now, on any of the longer term indicators, daily, weekly, monthly charts, we are far away from finding any kind of a bottom in the market really whatsoever. In fact, what we have seen is a slow, methodical move down to lower lows. We got a lower low today, even though it's trading at 10.70, we did get a lower low. These two lines represent very long-term moving averages, the blue 200 days and then 50 days with the dotted line. We're far, far away from both of them, and we also seem to be accelerating away from them. Of course, minutes were released on the most recent Fed meeting, which took place last month. Interest rate hikes would be appropriate. They are data driven, but they are to be expected if the data is proper. And according to the minutes, from what they have seen, the data right now suggests that it is an appropriate move. When we look at the shorter term charts, this being a 240-minute chart, we'll go ahead. You can see that we do have this little hook here, but I cannot really get all that bullish in this market right now, considering where the market's going, considering we're having a new lows on the day, and the fact that we're going to have, or there's a huge possibility, I should say, or probability, that we will see rate hikes implemented on the last FOMC meeting scheduled for the year, and that's set for December. So traders, with all the pressure that gold has been under, and the fact that we do have the market trading at new lows on the bull side of the fence, and I present all the findings that I see, when we still look at 1061 as being a 61% retracement, and it is a pretty long retracement because it's where we're calculating really the beginning of wave 3, which comes in at around 550, 533 is where we've got it pegged, up to the record top, which is at 1920. We still could make a case, although a very weak case, but a case can be made, that we are still looking at a potential bottom in this market, and we could feed off of this market. Now, should the market break hard and break through, call it 1061, this particular 61% retracement, of course, all bets are off. And if that's the case, we're going to see a pretty dramatic sell-off, as I said yesterday, initially to 1039 and then to 1,000. 1,000 takes us really into an area that we do have a lot of historical data. 1,000 comes in right here, and you can see a couple of tops here, just over, just under, and here, and here. But this is a pretty critical area, because this was the area that you had such a ceiling if you consider what happened back before the market really broke, and the break is above 1060, 1070 right here, but breaking above these series of tops right here. It took them a number of occasions, and I remember this time pretty well, but it took them a number of tries as they brought the market up. They bring it down, bring it down. Here it comes down all the way to 700, and then it takes it all the way to 1,000. This is the 1,000, the second time we hit 1,000. And then, of course, the market comes down and it cannot break that 1,000, but comes very, very close right in here. And then this is really the break that transcended the old price of gold into the new price of gold, and that was the mark that moves it up. Of course, came up, I believe, at around 1230 or so, comes back down and holds this line, and then we get this large spike up. Okay, so that being said, with all of this activity at this particular price point, you can see why when we're at this price point again, we've got a lot of different variables we want to look at. So if we do get a break below, are we going to see just as it was a level of resistance, are we going to see a break back down to 1,000 and that becomes support again and then trade throughout this range? Because I don't think you're going to see gold go to much below 1,000, maybe 950, 970. If we do get that sell-off, I don't see the days of $600 or $700 or $800 gold anywhere in our future, anywhere in my lifetime or my children's lifetime for that matter. So for that reason, this is an area we absolutely want to watch. I am reluctant to buy until we genuinely see this market form a base, have some higher highs, and take off. I am genuinely holding off to sell the market unless we get a solid break below 61. And if we do, we'll go short this market, but we're right in between those two stages right now. And that's the reason we are flat in the market. That's also the reason we developed trending markets. We got into an S&P trade at 2023, and the market again has just moved tremendously in our favor. We've got 50 points on that trade at 250 per point. It's not a bad trade right now. And the reason I launched trending markets was so that if we had this kind of scenario occur in gold, which I believed was quite possible, then we have other avenues as we await the proper move here. We have other avenues to kind of move our money into in the interim. So for those who haven't tried trending markets, I highly suggest you do. The trial is free. You can contact us. We'll give you an extended trial if you need to see more time. But I do recommend highly that you consider that. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review.